Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Over the past 5 days, the Australian dollar has been holding to a relatively negative sentiment. Behind that is the rejection from that 60-day moving average. The market has been descending and also nearly achieving its goal, which is around 71, 60, 80 area. We did get to 72.26 today, but nevertheless, one thing to note on this current decline is that there is mild bullish divergence, not only from the RSI, but from the MACD. Although the target is at 71 or around 71, 60, 80, I feel the next 40 or 50 points may be a struggle to reach, and therefore could see a snap to the upside back towards the region of 72.80 to around 73.30 as a potential objective. But then the market may give back its gains and look back towards the downside. So it's up to the trader in how they would view to trade this market, whether to take some profit or place stop losses according to your risk management, and try and assess how strong this divergence is. Normally from a bias of the two indicators, it could be up towards a target of around 73.30 for this week. However, the dollar index, which measures the greenback strength against a basket of 6 major currencies, hit a fresh high on Friday, or this morning, more to the fact, of 96.24. This has seen the euro plummet towards a 112.64 low. The dragonfly didn't eventuate as strong as the bulls may have felt. Now, I did point out last week it was a weak signal. Now, if it would close on a bullish candle, that is of the green, then yes, I would say that we should have seen more of a rise. But because of the bear trend and also the ADX, it's still holding to a negative case, still puts pressure on the downside. And with the RSI rejecting that midway point, could actually see the lows of 112 this week. We do have the Fed minutes, so no doubt the market will be keeping a close watch there. And also we've got the potential nomination of who will step in the Fed chair, whether it's Jerome Powell or Miss Bernard. So let's see who actually steps in. She is a dove, a little bit more than what Powell is. So be interesting to see who US President Biden nominates for the US Federal Reserve Chairman. Looking at dollar yen, posting 2 outside range days, firstly at the beginning of last week and now on Friday, sees a riskier bias to the downside, I believe, because of the fact that we did get confirmation from the prior outside range day. And if we see a break of 113.55, which is still a little bit away, could see a further target of 112.65 and reassess. The pound lost its momentum after recently displaying an inverse hammer. The fact is we're looking back towards the bottom side of its range, somewhere around 134, or maybe down towards that 133.5 area. Negative technicals, but keep an eye on that MACD. It is trying to attempt to restore its bullish bias, but at the moment it's negative, so this is why I thought we might see a weaker play. Looking at CAD Yen, very whipsawed, took out the 90.30 support and stabbed towards that 89.40.60 area, but failed to sustain. The quick demand came back into play, but still exposed. And I feel that we may see another down test towards that 89 mid-region. After a little bit of a question mark of that topside challenge around 1,876, the bears have continued to come to weigh on gold and now looks at that 1,844 trigger level. A negative RSI, if that marries up to the MACD, could see that 1,844 trigger pulled and therefore expose a region of 1,815, which is looking very much shaping up to the start of this week. Wrapping up with oil is that the current price action on Friday and today reaches its objective of 74.80. Now from the downside target reached, there is still a little bit more room, which could see a drop towards $72 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, go out for the intraday report. I hope you enjoy the great start to the new week.